people are missing out on one of the biggest catastrophic cash heists in the history of the world. They don't even know what's happening. Now, just know you might be missing one of the biggest opportunities in the history of the world because our governments have really screwed up. And I won't talk about conspiracy, but something's fishy about this government crisis. There's something very fit. Why did they have to shut down the whole damn world? And I think it's because they're covering up something very, very big.
When the central bankers of the G7 nations went into the room in Jackson Hole in August 2019 and they voted on the going direct reset, everything that's happening to us right now is part of the going direct reset, and they voted on it. It was a plan. Okay, so they wrote a plan. They decided to do this. So they've been engaged in the financial coup for 20 years. We're now coming into the end game. They have to consolidate the financial coup, and they vote on the going direct reset. And with that one decision, they made a decision over the next year to put 500 million people out of work. That's the equivalent of dropping several nuclear bombs around the world. That's financial warfare. And they made it intentionally, they made it knowingly, and it was a plan. And what is very important to understand when you think about this is people are not dying from magic viruses. People are dying from tyranny. They're dying from a great poisoning that's part of that tyranny. But our problem and the thing we need to be afraid of is tyranny, because the tyranny is about to get much, much worse. And it's the passports and that system of central bank digital control that will give them the ability to do that.
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. Man, I hope that YouTube does not take the video down because of that intro. Everybody smash that thumbs up button. I just found out and have confirmed that my YouTube and Twitter are both officially shadow banned. We speak our minds here. We talk about the truth. We talk about the realistic approach to take when trading these markets, and YouTube and Twitter do not like that. Guys, I found a way to throw the algorithm off. Make sure that you smash that thumbs up button, unsmash that thumbs up button, and then smash it again. Do the same thing with the subscribe button. Subscribe, unsubscribe, and subscribe. It throws the YouTube algorithm off. Blessings to you guys all for returning to the YouTube page. Stick around to the end of this video breakdown. I have 4 books that I'm going to highly recommend that you all read, especially if you all are very keen to accumulating information and you want a very open-minded perspective read. I have very interesting books for you guys towards the end of this video breakdown. In today's video breakdown, we're going to talk about XRP price action. I'm going to show you guys how you could have utilized the strategy that we teach here at CYPRX to capitalize on a beautiful risk-reward ratio of a 1:6 to 1:7 RR on XRP USD. In today's video breakdown, we're going to talk about in particular manipulation, pattern identification, and entering based off of discount after banks and institutions show us a willingness to buy price, and being patient enough to buy at a discount. Okay, so first I want to take your attention over here to the New York session. You guys know that we are New York session traders here at CYPRX, or at least the majority of us here are. We had an outstanding Zoom call with the students this morning. Over 16 students, 10 of which placed the same exact trade on GBP/JPY. I'm not going to get into that breakdown. That specifically was for the CYPRX students this morning, but make sure that if you guys are interested in that mentorship, you guys are clicking the link down below and not any outside link. The link is in the description down below, cyprx.teachable.com. Let's break down this trade entry on XRP USD. So first, we're going to cover number 1. We're going to talk about manipulation. Here you guys can see I have the manipulation identified during the New York session. Now I've displayed this manipulation region to you guys during every single session. We see this is when the majority of AI takes over the market. During Asia, we have a manipulation window prior to the session open. During London, we have a manipulation region prior to the session open. And same thing with New York session prior to the manipulation region. This is when the previous banking institutions are passing price action over to New York. We understand from a New York institutional perspective, 8:30 a.m. is when bank and institutional traders are finally sitting at their trading desks and actually putting in orders. This is when they take over price action from the artificial intelligence that managed price action during the bank and institutional traders' absence. And this is when the bank and institutional traders are actually sitting at their desks putting in orders, okay? Again, this is the manipulation region. I've displayed this time and time again for you. What can we utilize this as a catalyst in our trading to trade in tandem with the bank and institutions? Well, we understand liquidity traps. Well, right here above these highs prior to New York session, what can we see? we can see them manipulating sellers in the form of bearish candlesticks, okay? People that chase bearish candlesticks and are anticipating some type of bearish move based off of price action or based off of what candlesticks are telling them, we can see massive bearish impulsive candlesticks. Retail traders that have no control over their emotions would be dumping sell positions right now, trying to chase the market, right? FOMOing out of the mouth, thinking that the market is going to sell off. Why? Because this could be catalyzed as a lower high in comparison to the previous one. We also have retail resistance in the form of a triple top formation, right? Look at this retail pattern right here. Here's a triple top formation. We know retail traders are taking leveraged sell positions from these highs. Why? Go and read Baby Pips. Look at how they explain this pattern. That is what 90% of traders are doing. Bank and institutional traders do not trade that way. So with that being said, covering manipulation, how can we utilize this region as a catalyst to perfect and enhance our probability to place a profitable trade? We can identify this as potential liquidity above highs. We also see them putting in early leveraged buy positions beneath lows and how they came and liquidated those positions. Once we came into these early buy positions or these over leveraged buy positions, or even people that have sell stops beneath these lows, we can see the market completely halted. Now we can also see that that took place at a psychological level major, which if we're trading any pair against the United States dollar, we are utilizing the quarter methodology. Why? Because that is how the United States dollar moves in quarter theory, okay? So we see here 3875, we see the market completely halt at that psychological level. Now we have covered manipulation. We can move on to pattern identification, okay? This is the pattern that I teach you guys to identify time and time again on the CYPRX channel. Why? Because we know that banking institutions are the only people with the amount of money, or whales are the only people amount of money, whatever you want to call them, whales, institutions, private investors, people with billions and trillions of dollars, much more money than you and I as a retail investor, are the only people with the amount of money to move the market this way. This is called a manipulative move to bully price action to favor institutional order flow, okay? So what do we see here? We see the market set a liquidity trap. They sweep that liquidity trap and then they move price action. Once we have identified this price action, this is a green light for us as retail traders to have a higher probability trade. Remember, nothing that we constitute here is financial advice. Our goal as traders is to give ourselves a higher probability outcome that the trade is going to go in our favor. So what do? Once we've identified that this pattern has taken place, which is a sweep of liquidity, especially if we're looking for buys, as above, so below. If we're looking for sells, we're looking for the same thing to the downside, but first for price to go higher to then take price lower. As above, so below, we're looking for the same thing for price to go higher. We're looking for them to manipulate people to sell or entice people to sell. Really what they're doing is grabbing liquidity from previous areas of lows and then sending price higher after putting in their buy position. This is pattern identification. So once we see the market dip into a potential area of liquidity, reject the psychological level, where in this case it was the what? The 3875 psych level, okay? And then break previous market structure or a previous market structure high, we know that this is a bank and institutional pattern. So now we know that the market makers could be potentially in control of these markets. Remember, nothing is guaranteed in this market. However, we are trying to give ourselves what is called an edge in this market. So that leads me over here to this pattern right here. What are we waiting for? This general little projection tool. What do we know once this market pattern takes place? We know that somewhere in the future or somewhere in the next area of price action, the market makers, if they are going to continue this trend, are most likely not going to be able to fulfill their entire order with this one bullish move. No, banking institutions have to put in multiple orders. So what does that require them to do? That requires them to manipulate price, to push it down into discount, building sell orders above highs or over leveraged sell positions from people guessing tops, or people even willing to put buy stops above these highs, building liquidity to then give themselves discount to take price higher. And this is when you get the definition of bullish order flow, or a bullish reversal, or a bullish trend, or higher highs and higher lows, okay? And this, as retail traders, is where we're looking to enter into the market. Over here to the right-hand side, once we've identified all of the things that I just constituted to you in this breakdown. manipulation. We're identifying and giving ourselves a reason why the banking institutions could push price higher. Well, we've identified that here. We see them manipulate people in the form of sells above these highs, and we also have an area of interest where people are going to be willing to buy price action if price does surpass these highs. So we have an area of interest and logic behind our trade to take buy positions. Why? Because we know the banking institutions target liquidity. Well, if we see that they target liquidity beneath a low and they halted price action, which means they failed to push price beneath a psychological level and continue the definition of a downtrend, we can cancel out this bearish order flow or this bearish momentum and understand and look at it as a manipulation move. Why? Because if these were proper bearish candlesticks, what would happen? What would logically happen? Price would fail to make higher highs and higher lows and would continue the definition of a downtrend, which is lower lows and lower highs, which we can clearly see price in this area, once we break out of the manipulation, failed to do so, which leads me back to pattern identification. Instead of making lower lows and lower highs, what did price do after it showed us the willingness to grab liquidity from lows and break previous market structure, creating new market structure highs? In this area where we're looking to get into trades, what can we see that XRP price action did in this general vicinity as soon as we broke out of the manipulation window? Can anybody pause the video? I'm going to zoom into the charts and show me where you could have identified this pattern to capitalize on a beautiful risk to reward ratio on XRP on potentially a leveraged account or even a dollar cost average position. Again, nothing that we constitute here is financial advice, okay? Can you pause the video and show me where, without me showing you, where the pattern took place? That pattern is right here. Here we can see a low formulated in the form of a psychological level. After the market grabbed potential liquidity over here, it halted at this psych level. Then price created a retail pattern trap in the form of a double top formation. It then dipped beneath internal liquidity, grabbing these two lows, broke above the psychological level 3875 again, where we can see price consolidated and failed to break below here, and it led to a market break in previous market structure. So we can see now how the market structure for XRP has showed us a willingness to grab liquidity from lows and make new structure highs. So we have to assume, again, based off of what it is that I'm teaching you guys, that bank and institutional traders, or people with much more money than you and I, are the only people in the market who can create this type of pattern. You have to understand that retail traders cannot create this type of pattern. We do not have enough money to manipulate the market this way, move it in our favor to take discounted positions. No, no, no. We have to be able to react when the banking institutions have created this pattern to enter into buy positions to move in tandem with the bank and institutional order flow, which will be entering in at lows at future discounted prices. Okay, so I hope that this trade breakdown really showed you guys how you could have utilized the CYPRX strategy and dollar cost averaging positions on XRP or maybe even a leveraged account. Just showing you guys, if you had waited patiently to buy at a discount after price showed you the willingness to grab liquidity from lows, break previous market structure, and reject psychological levels, here was your entry right here based off of our Fibonacci retracement levels of anywhere between 62 to 70% discount. Once price broke previous market structure and retraced at least 25%, we are doing what? Let me get rid of the moving averages because that is a gem that I give to the CYPRX students. We break out of the manipulation window, okay? We are now operating out of the manipulation window. We see the market makers show us a sign. What's that sign? They grab liquidity from lows. They halted at a psychological level. They manipulated sellers, building liquidity. They've now grabbed those lows and showed us a willingness to place buy positions after the manipulation window by breaking previous market structure. If we now as retail traders want to get in on the institutional move, the best bang for our buck based off of what the market information is telling us is to buy price action at a discount. Now all you have to do is be patient enough to wait for price to retrace to a discount. Here at CYPRX, we like to utilize the discount of 62 to 70 to 79% discount. You guys can change your discount to fit your needs. This is just what I like because this is what the banking institutions like. They like anywhere between 62% discount and lower, coming back sometimes even into 100% discount. Now you guys can literally go and change your Fibonacci numbers however you want. This Fibonacci tool is not some magical tool that's going to tell you that, oh, the 38.625 Fibonacci extension is going to come into fruition. No, this tool was created on TradingView for you to measure where potential discount is going to be at some point in time in the future after price breaks a previous market structure high or low. That is going to lead you into moving in tandem with the banking institutions at either a premium price or in the form of buy positions at a discounted price. And as you guys can see time and time again, me showing you this strategy here on the YouTube channel, we tap into 70% discount, banking institutions add to their order. Okay, because again, confirming the ideology that they cannot put in one institutional order here, because what would that price action look like? If price did not put in 1, 2, maybe 3, even 4 orders, what would this price action look like? It would just look like one entire candlestick that shoots all the way up to the moon, right? That is not realistic. Price has to breathe. After breaking previous market structure, the banking institutions have to add to their orders. And knowing that information, we can capitalize on their pullbacks when they add to those orders, okay? By understanding structure, by understanding manipulation, by trading outside of the manipulation window, by being patient, by entering based off of logic with logical price targets. Even if you were just trying to target this area right here, okay? This would have been a beautiful risk to reward ratio, just targeting this area of 1 to 4, all right? Showing you guys time and time again that something very interesting is happening with knowledge accumulation in the market as of right now. CYPRX, we are being shadow banned on Twitter and YouTube. This should tell you all something, that we are spitting big facts here. The CYPRX students know it, and you guys will know it soon too. We are growing. I told people that CYPRX cannot be stopped. Blessings to you guys all. Make sure that anybody that is interested in the mentorship is clicking the link in the description down below or straight visiting cyprx.teachable.com. We do not have a WhatsApp. We do not have a Telegram. There's a lot of spam in the comments down below. I will not reach out to you and ask you to join the mentorship. If you all want to message me on Twitter and schedule a Zoom call, you can even message or email the customer support email to schedule a Zoom call to make sure that you are actually talking to me personally. You're more than welcome to do so. As always, blessings to you guys all. Make sure that you throw the YouTube algorithm off by subscribing to the YouTube channel, unsubscribing, then resubscribing. Same thing with that like button. Hit that like button, unclick that like button, and then re-click it again. I found out that that throws off the YouTube algorithm, and they don't really understand how to comprehend that. So blessings to you guys all. Really do appreciate the love and the support. Now, here are the 4 books that I told you that I'd mentioned to you all before we hop off of today's breakdown. The first one is The Wealth Hoarders, How Billionaires Pay Millionaires to Hide Trillions by Chuck Collins. Very intuitive book, very interesting read. Again, not really constituting anything here. I'm not portraying some type of bias or anything like that. I don't want this video to get taken down, but this is a very interesting book. I highly suggest you all dabble into it, especially if you're an open-minded individual. Another one here that we have is The Shadow Government by Tom Engelhardt. Okay, this is a very interesting read. Surveillance, Secret Wars, and Global Security State in a Single Superpower World. Very, very interesting read here. Another one is, here we have Secret Empires by Peter Schweizer. Very interesting read as well. And then the most important book that I highly suggest that you all read out of any of these 4 books is Outwitting the Devil by Napoleon Hill. I highly advise that you read this book. If out of any of the 4 that you choose, this one should be first. Outwitting the Devil by Napoleon Hill, and then go from there. As always, be cognizant, be aware, take it easy. Blessings to you all, and I'll see you guys in the next video breakdown.